Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended higher, supported by the US Fed keeping its forecast of rate cuts unchanged for 2025 at 50 basis points. Major US equity indices rose around 0.5 to 1%, even as economic data showed weakness in the US economy. Asian equities trended mixed, with India and Korea rallying about 4 to 5%, while Indonesia and Philippines fell 5% and 2% respectively. After consecutive weeks of gains, Chinese equities fell around 2%, despite policymakers unveiling a special action plan focused more on demand-side stimulus, while data showed that the 70-city average primary property prices fell further. Back home, Indian assets staged a broad-based recovery. The Nifty index rose 4.3% for the week, recording a gain in all 5 trading sessions of the week amid upbeat global sentiments, short covering ahead of the next week's expiry, strengthening Indian rupee, and improving foreign investor inflows. Broader markets outperformed the Nifty index, with the Nifty Mid-Cap Index up 8%, while the Small-Cap Index was up 9% for the week. Among sectors, energy, metals and utilities led the rally with gains of over 10% for the week, while IT was the only sector to end in the red with a cut of around 1.3% for the week. The Indian fixed income market had a strong week, with government bond yields declining across the curve amid rising expectations of an RBI policy rate cut in the month of April, strong foreign investor inflows into domestic debt market, and RBI's announcement of an additional 50,000 crore OMO purchases next week. The 10-year Indian government bond yield fell 7 basis points to a 3-year low of 6.63%, while the 3-year and 5-year yield fell 6 basis points and 9 basis points respectively. Commodities also gained for the week. The INR gold was up 1.9%. Brent crude oil rose on Thursday after the United States issued new Iran-related sanctions and renewed tensions in the Middle East countered strength in the US dollar. Brent crude oil recorded a weekly gain of around 2% to close at $72.1 per barrel. The INR appreciated against the US dollar, rising 1.2% to close at a 2-month high of 85.9 per dollar, supported by lower than expected domestic trade deficit, improving foreign investor inflows into domestic bonds and equities, and unwinding of speculative long positions. Coming to the macro updates for the week, there was only one on India's trade deficit, which narrowed to USD 14.1 billion in the February of 2025 compared to a USD 23 billion deficit recorded in the previous month. This was also the lowest deficit recorded since the month of August 2021 amid a sharp decline in imports. Overall, imports fell 16.3% year-on-year to USD 50.96 billion in the period amid a pullback in energy prices. In the meantime, exports dropped by a slightly softer 10.9% annually to USD 36.9 billion, dented by the softening industrial output domestically. Other notable highlights of the trade data included services exports, which rose 23.6% year-on-year in February compared to a 12% growth recorded in the previous month. Services imports rose 8.7% year-on-year in February compared to 12.6% in the previous month. This drove services trade balance to USD 18.5 billion in the month of February compared to 18 billion recorded in the previous month. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.